One of the concerns that we have in in sharing this system with others is the condition to be able to effectively convey what's happening with sensitive indicators. And repeatedly we make comments about this is the way one indicator works and this is the way another indicator works. And we've got the rules indicator, rules file, and the patterns up and pattern types down, and files, and the divergence files, and many others. But the emphasis, the idea that I'm trying to convey here is that you really do need to pay attention to what indicators are doing, because apparently from our limited response that you get from people, they, especially when they're first starting to learn the system, they miss some of the indicators. And so this video is about red spikes, and I've got 4 examples in Apple, and I'll just share with you the ideas of what I'm trying to convey here. In each of these cases, well, I'll say this. Well, in every case, we're looking at a red spike, and with the 3 green lines, the red spike goes down the next day, not up. And if you've listened to me make comments about red spikes, they're excuse me, they're 95% accurate, and comments like that. And when I make comments like that, it's based on the rules that go along with the indicator. It's not based on a broad spectrum. If you look at a red spike and there's 10 of them and 5 of them are going down and 5 of them are going up. Well, when the 5 going up, they have specific conditions that constitute a 95% ratio. So hopefully that idea is understood when I've made that idea or made that comment on numerous videos in the past. But first of all, I'm gonna compare what they're all doing. Each of them has a red-green above a red. I said that wrong. Each of them has a trend green above a trend red. Or normally the way I say it is trend red is under green, which means they're in a downtrend. Now, all of these have that condition. They're all heading into a downtrend. And if you look at the lines, all indicator lines on this green line over here are going down. All of the lines in this blue line blue vertical line are going down. You do have a few down touches that are in this blue line that you might not be in others, but over here you have all of the indicator lines going down, and in the left green line over here, all of the indicator lines are going down. And in fact, in this first one on the left, the zip, you have a difference in zip red. And again, if you've heard me comment about differences in zip red, when it drops 70 plus points, that's very indicative of something stronger movement coming, and depending on where it lands, that's a factor and that type of thing. In the one on the left, the zip green goes from 81 to 4. In this one, on this green line in the middle, it goes 63 to 6. and on this blue line it goes from 71 to 3, and on this green vertical line on the right it goes from 92 to 20. So 3 out of the 4 drop 70 points. This one here that drops the green line in the middle, that one drops from 63 to 6, and that's over 50 points. But this particular green line is a 2-day downstroke from the top, if you will, or from a higher point. And by that I mean, I move the green line over 1, if you look at what you've got now, zip red is at 63 and zip yellow is at 90. Now that's a nice separation, but the basic rule of the red spike is that red is under 50. So there's a good chance that that it could go down, and obviously the normal trading pattern, the normal trading activity is that you wait till the next open and see what's happening and then make your decision. And if I move this green line back over here as if I was attempting to buy it on this day, I find now that I'm in another red spike, excuse me. And so this would logically be this middle green line would logically be the low point, or the red spike pattern that we call it. Now, in this middle green line, we obviously don't see it until the open of the next day, and this is where you can. I'm going to explain two things. I'm going to talk about the open in each case next day, so that you get a feeling of how you're trading a little bit. And the other thing is, well, let me cover this point first. In this example here, on the left, oops, I moved the line, excuse me. On this example, we have a red spike, classic red spike. Zip yellow's at 81, and yesterday, and I said that wrong. Zip red is at 81 yesterday, and zip red is at 4 today. So that's a 70+ point drop in zip. It's nice and low and nice and high. That's an automatic red spike, right? Red spikes by definition are an uptrend. Why doesn't it go up? Well, what's the rule on trading? You wait till the next morning and identify if it's a gap up or a gap down. What is a red spike supposed to do if it gaps? It's supposed to gap up. When you have a gap down on a red spike, you automatically know that something's not right. And so what do? You see the gap on this day here now, the day after the red spike. What happens? The zip red has gone up. Zip red on this day had, or I should say the price, had a high of 108.95, and it opened at 108.89. So it goes up 6 cents. Excuse me. It goes up 6 cents. Now, I would venture to bet, if you will, that was the difference between the ask and the bid price. And so there was one transaction that moved it up into the high, 6 cents higher, and then it started down for the rest of the day. And if you've had a chance to look at candle theory, you know that that's the primary pattern for a red candle. A red candle goes up, and then it goes down all day long, and then it goes back up to create a lower tail on the red candle. So this one, in our trading activity, even though we had a red spike, we know that what happened the next day is no good. The green line in the middle, we have basically the same thing. Almost immediately, however, I'm going to move this green line over. This would be the morning trade after your red spike. What happens here? Red goes back up. It does go up. But also we had a gap down and we have a zip green that went to 0. And when we have that, we know that that is a red-green twin spike. And with a red-green twin spike pattern, we know that next day it's likely to go up. High probability that it'll go up the next day. Now obviously you could trade this day by waiting till you got to the bottom and then the bottom of the cycle. Because when you find a day that you have a red-green pattern, it's going to go up. So if you happen to be looking at it and you can buy the bottom of the cycle on this candle and it'll be going up, because the next day you know it's going up because of the green, because of the red-green twin peak pattern that has been created. On the blue line, this one gaps up the next day. It has a low of 97. It has an open of 97.39 and a low of 97.32. Now that's a 7 cents drop, and again, we can identify with the open. It's I'm quite sure here it closed yesterday at 96.87 and opened at your 97.39. So it's hard to tell on these little candles, but anyway, we got a nice gap up. It goes down 7 cents and then it starts going back up. Again, it's probably the difference between your bid and your ask price, and immediately it's going up. And so you know that's a good red spike to deal with. There's another good indication is that your zip pink is just under 50. That zip pink is only at 86, whereas the zip red is at 3. So excuse me, I punched the wrong button. Zip pink is at 43 and zip red is at 3. And so zip pink went under 50, but it's a long ways from zip red, and not always, but that's a good indication that it's possibly going to go up the next day. The last one I want to talk about is this green vertical line on the far right, and that green vertical line again has zip red goes from 92 to 20. It's a nice 70-point drop in zip red. I mean, this is a classic red spike. There is no doubt about it. Why doesn't it go up the next day? Now, there's even, I'll even share this with just so that you, I didn't think about this at first. On this day, the day after the green spike, excuse me, the day after the green red spike, you have a red candle. However, it is a gap up. And you can see that, but this day here on the, on the red spike day, price closed at 108 even, and then it opened at 108.52. So we had a gap up of 50 cents. Or 52 cents or whatever. And then it went up, it had a high of 108.93, so it went up about 41 cents before it came back down. And it's hard to say how long that took to go up and down. We don't know, but in either case, we've got a gap up, and that signifies a nice red upturn, right? Well, there's a good chance that if you would have identified with the candle theory on that day, that it would have started to go up rather than down. And the basic definition of a candle theory activity definition is it opens, goes up, then goes down. I said that wrong. A green candle or no, yeah, I said it right. A green candle opens, goes up, and then comes back down. But this is a red candle, so it's going to go up, come back down, and then go back up, and that's a red candle. I think I said that wrong. A green candle opens, goes up, and then goes down, and then comes back up. A red candle opens and typically goes up and then down and then up. Anyway, forgive me for saying that wrong. Anyway, now I've I've shown you 3 red spikes that don't react properly. Okay, and I avoided sharing one thing with you. Hopefully you've seen it, but I want to clarify it because it's really critical that you follow the rules for the indicator. This blue indicator here, this blue vertical line has the trend trio, the 3 groups going up. Okay? The green line trend trio is going down, but notice the other 2 groups, the green and orange are going up, and the red, I think the red and green are both going up. The red may have started down, I'm not sure, but my point is the trio started down. Over here it's real obvious. On this green middle line, the trio has started down, and in the other 2 cases, the other 2 groups in power and swing charts, they're up. And then this one over here on the left, the green vertical line is after the hump, the trio hump, they're going down. And in this case here, power green is under orange, and also in the swing chart, the blue is under the green, which indicates a downtrend. So what's the key element for one of the basic patterns that appear all the time in the chart or in the system? The definition of a red spike is with red under 50 and zip yellow above 50, and both of them are going down, and that the one of the key elements to, or one of the most effective ways to buy a spike is with the trend trio going up. Now, I can't be there when you pull the trigger. You need to look at when the trend trio is going up, and maybe you glanced at the others, and actually the trend, all of them are going up in the blue example, blue vertical line example. And there's other things too. Look at, you got a triple down touch in your green down, your trend green down touches the blue vertical line, your red down touches the yellow, and gray passes under 0, and they all 3 go back up. And also, just so that you note, we are on top of the master trend line, the blue line going across the chart. And so that's a reaction or an indication that you're going to have an uptrend. So when you see red spikes, verify what's happening around the red spike. Look for other examples that say, indicators that say the price is going to go up. They're all above 0, but all of these indicators are going. All of the good red spikes, next day red spikes, are going up, and if they're not going up, then it should be a big question mark in your mind if you want to enter it. If you missed that, you should be able to spot normal candle activity theory and understand what normally, I mean, there's a vast majority of times that green candle opens, goes down, and then goes up, and then goes down. There's a vast majority of times that the red candle opens, goes up, and then goes back down all day to create the body of the candle, and then back up to create the lower tail of the red candle. So it doesn't. Sometimes you get a flat bottom green candle or a flat top red candle. Not very often. There's usually that bid-ask difference of 5, 6, 10 cents, whatever it might be. So be conscious of what is around the pattern that you're investigating. These are super sensitive indicators, and they'll give you the information. But you've got to recognize the information. You need to work with this system. Don't be afraid. I mean, these videos are free to anybody that wants to look at them. You can spend 2 months going over these videos before you even make a trade. So don't be super excited about getting in there and making a trade real quickly. Spend some time on your simulator and get familiar with the system, because it is fantastic. It's just that some people get so excited when they, especially when they see the 1 pattern and 2 pattern gaps. I mean, when you have 15 indicators all in the same pattern, and that is indicative of a 1 pattern gap up. The candle's gonna, or the stock is gonna gap next day, with the condition that there are typically and usually other pattern types, like a BOC pattern and a bottlenose pattern and whatever, all the patterns. If the pattern has 15 patterns in it, all the same, and it classifies as a 1 pattern gap up, other pattern types out of the 24 that are there, other pattern types can be there or will appear at the open, but you don't need them. And when you're dealing with gaps, you don't need them at the next day, like crossovers and things like that. So just it's exciting. I don't know. It's amazing. You put all the different powers together. The procedural power. Let me comment briefly on that. The procedural power inside the system is when you spend the time analyzing why, through the indicators, why a price could or should go up. That procedure, you have the indicator power, the market, the formula power, and you have the procedural power inside the DVD system. And this procedural power is your continual daily analysis of these indicators and how they move and what they do, and that repetition strengthens your ability for identification of how things react. And so spend the time, feel comfortable before you start trading with it. I mean, red spikes are real easy to make money on, but make sure, I mean, you're typically not going to get hurt but in a red spike, but you're going to just be much more confident, you're going to be much more excited if you also have a trend trio that's going up when you find a red spike. So it's exciting. What can I say?